average for the last 5 years is minus 25. Switching to the hard data that also came out today, well, retail sales for August were positive. They rose 1% to their highest level since July 2022. Warmer weather helped spending on clothes, food and drink in particular. Meanwhile, public sector net borrowing came in sharply worse than expected, 13.7 billion. That was 2.5 billion worse than forecast. Well, joining me to discuss is Neil Bellamy. He's Consumer Insights Director at GfK, who conducted that survey on consumer confidence. And Kathleen Brooks, Research Director at XTB. Very good morning to you both. I think we've lost Neil momentarily. So, Kathleen, I'll come to you first of all. Why don't we go through the other bits of data in case Neil's able to join us? The retail sales better than expected for August.
Yeah, and it was all boosted by this kind of late summer burst of sunshine that we got. So sales of summer clothes, for example, food and drink, they were driving this increase in retail sales. Retail sales have been fairly moderate, actually, most of this year. So this was a welcome boost, particularly for retailers. However, it was also boosted by sales. So as we get into the Q3 reporting season, retailers will be watching their margins very, very closely because they could be compressed if people are only buying things because prices have been cut. So whilst it's good news, it suggests that, yes, the consumer and retail sales will boost GDP as we get into the third quarter. But it does suggest that there's savvier consumers out there who are willing to look for their bargains, and that might not be so great for the retailers' bottom lines.
Talk to us about the public sector net borrowing numbers, because those were less good than expected.
Yeah, it was a huge increase in borrowing. Pretty much no one forecast it. And debt to GDP in the UK has now hit that magical number of 100%. So it heaps a lot of pressure on Rachel Reeves, just as she's facing pressure from actually scrapping the end of the winter fuel payment. She's got a £10 billion windfall from the Bank of England today. With this debt reaching this round number of 100%, it really does put the pressure on her. Does she help pensioners, or does she try to pay down the debt, which may be beneficial, or 100% debt to GDP ratio is a bit of a tipping point. It can cause problems down the line if investors lose confidence in us. We saw that in 2022, and she knows how sensitive the markets can be to these heavily indebted nations like the UK.
Neil's back with us from GfK, who carried out that consumer confidence survey earlier today. Neil, the numbers were very, very disappointing, showed a big drop, certainly relative to the numbers we've been seeing earlier this year. Put it in context for us.
Yeah, I mean, when we came into the start of this year, we were on minus 22. So at that point, it was quite a low score, but it was gradually increasing because we came from a low of minus 49 back at the cost of living crisis height. And this year, gradually been creeping up month by month by month. This month, suddenly, it slipped back by those 7 points. So we then looked into what was causing that. And it's very much forward-looking measures. You know, what do people think about the economy over the next 12 months? What do they think about their own personal finances over the next 12 months? And those were all the measures that have gone down. So indicating people were worried about what's coming up in the near future.
And Neil, when you do see consumer confidence data worsen like this, particularly those forward-looking factors, does it then weigh on the economy in turn, or is it hard to pinpoint those sorts of causalities?
Not specifically, but it does give big warnings. So one of our measures is now a right time to buy? And again, that fell back by 10 points. We see in other data that consumers are very focused on the everyday items, so spending on utilities and spending on groceries. And when it comes to things like major purchases such as fridge freezers and TVs, they're much more likely to only replace those when they really have to, when they're broken. So it's got that kind of long-term knock-on effects on the retail sector.
Kathleen, does consumer confidence matter for the overall economy?
Well, I mean, consumer confidence in the UK has been negative for quite some time. It's not like it's ever really boosted things. It could slow momentum as we go into the fourth quarter, that all-important Christmas season. And I think what Neil's just said is completely right. You don't need a lot of confidence to buy discounted summer clothes or to buy food and drink, which really boosted the retail sales. So we've got a dichotomy in the UK. People are willing to spend. Wage growth is still quite strong. But we've also got this weak consumer confidence. And what the government and the economists are going to try and do is make sure that we don't think ourselves into a recession down the line.
In terms, Kathleen, of the other bits of data we got this morning, public sector net borrowing, you mentioned, was worse than expected. I guess it shows a sign more broadly that the first half of the year was better than expected, but the last couple of months are showing that a changing tune for the second half of the year?
I think it does. There's been more pressures on the public finances. There's been public sector wage increases. That's what really drove it. They were announced in July. So, of course, that's going to come through in August. It also shows that actually we've had stronger growth in the first half of the year, but that hasn't helped bring our deficit down. That's coming down so slowly. And our debt level is still so high. So growth, yes, it's been better than expected, but it's nowhere near at the level that we need to start eating into our debt levels.
Neil, it's interesting what Kathleen mentioned about consumer confidence from GfK, from your company, is often negative. When was the last time it was positive? And are we just a very sort of timid nation at the moment when it comes to consumer confidence?
Well, we've been running this for 50 years and the overall average is -10. So as a nation, we're never particularly positive. The last time it was positive was January 2016. And we all know what happened in the summer of 2016. It's kind of never really recovered since then. So what we were hoping for was the recovery we've seen this year. It got us all the way back to -13. So very near to our 50-year average. But this has then just knocked us back down to probably what's been more typical for the last 5 years.
Kathleen, just to round it all off for us, is the base case expectation still that the UK economy will avoid a recession?
Yes. I definitely think so, especially with interest rates expected to come down again in November. There is some good news. It's a bit thin on the ground, but I think the economy is just chugging along. It's not about to fall off a cliff or anything.
Neil Bellamy and Kathleen Brooks, thank you both very much for joining us. Very much appreciated. Let's have a look at the markets before we leave you on Business Live. And it's been a very positive week for equities. But the only region that's really positive to round off the week is Asia. Very strong indeed. The Nikkei at 1.5%. That comes off the back of the Bank of Japan holding rates steady. Of course, had they moved rates, they would have hiked rates. Unlike most of the other central banks around the world, they didn't. They kept them on hold. That was expected at 0.25%. Japanese inflation came in at 2.8% as expected, and the Nikkei led the charge for Asian markets to end a positive week, up 1.5%. European trade has been softer, but it has been a positive week coming into this. As you can see, Germany's down 0.8%. Mercedes-Benz down 6% after they lowered their forecasts. And as you can see, France down a similar amount. The FTSE 100 also ending what has been a positive week in the red, down 0.5%. And a big factor there has been the strong pound. If we switch to currencies, you can see the pound back above 133. It's really been a rip-roaring week for the British pound. Indeed, many currencies have strengthened against the US dollar. It's been a week of weakness for the US dollar after the Federal Reserve cut rates by 0.5%. Commodities very strong this week in response to that weaker dollar. Oil, though, ending the week on a sour note whilst gold hits an all-time high. That does it for Business Live. Back to Matt Barbette next.